Afternoon, everyone. Today I'm joined by James Noone from Vanguard Investments, or Vanguard Australia. We're very proud to be involved with Vanguard, have been for a number of years now. It's a name that you are likely to be familiar with. So first of all, welcome James, and please provide us with a quick introduction of who Vanguard is.
Thanks, Bill. Thanks for having me on today. It's an absolute pleasure to be here. Look, Vanguard, we're a global investment manager. We're, in fact, one of the world's largest investment managers. We've been running now for 45 years, so we've been around for a while. Originally founded in the US by Jack Bogle, but have expanded around the world, including Australia. We've been here since '96. We're really focused on helping investors achieve their goals over time, and we do that by providing really good quality products, predominantly index style products at the lowest possible price that we can, and we see our value in doing that and working with advisors such as yourself to do that to help clients achieve their goals over the long run. We do have about $8.8 trillion invested on behalf of clients around the world, which is amazing. About 30 million clients, so you can get a feel for the scale of us. And we have about 17,500 staff, so I'm one of many.
Well, yeah, look, when it comes to investing your hard-earned money, size is very important, and we recognise that. What are the takeaways from the past week that's been in global markets, particularly equity or share markets? Yeah,
definitely, Bill. I think the end of Feb we've had a lot of movement, as everyone would be aware of. In the last week, though, we saw the end of April, and we saw global equity markets or share markets close strongly. April ended up surprisingly being one of the best months in the US share market since the 1980s. So whilst obviously Feb and March was a big drawdown, April was an initial recovery of sorts. So that was encouraging to see. We still see the impact of coronavirus, though, in economies around the world, as we know. Something close to home, we saw the big four banks over the last week sort of talk to the fact that they won't be paying dividends, interim dividends at this time of the year, and that they're provisioning for potential bad debt. So, good prudent decisions there, but it will have, obviously, an impact going forward. The other interesting one that we continue to see and track is unemployment. The ABS, the Bureau of Statistics, came out earlier this week with quite a large number. We're circa around 10 to 11% of unemployment. The belief of ours and others is this will come down as we sort of return to work and isolation goes away. But it is at very highly elevated levels compared to what it's been for a long time. The other interesting thing that we've seen in the last week or so is that renewed tension between China and the US. A little bit of it's been around COVID-19 and Trump and the administration there trying to, get China to accept some responsibility. But also there's an underlying theme there is, Trump is coming up to an election and needs to be seen to be doing more, especially when it comes to China. So, our view is, that's we'll see a lot more of that going forward between the two big superpowers in global markets over the weeks ahead. Interestingly, again, if we look in Australia, interest rates, the Reserve Bank of Australia met on Tuesday and announced that rates would be on hold at 0.25% for yet another month, record lows for a longer period of time. So it's pretty amazing time period we find ourselves in there. And then last but not least, oil. We saw oil sell off heavily due to oversupply. It is interesting, though, those prices are starting to come back. The barrel price in US dollars has ticked up towards $30 per barrel, and that's come about because the oil producers have cut supply. So now a lot of moving parts in the economies. It's creating obviously movement in markets, but what we have seen is probably a slight change in people's perception with this view that hopefully we're starting to see a pathway towards returning to work and removing social isolation. So that will help with confidence going forward.
Yeah, no, really appreciate the update. The narrative seems to be turning cautiously into recovery. Index is a fantastic way and a cost-effective way to get exposure to diversified markets globally, which forms it's only part of a diversified strategy, an active strategy, and great to get your take on the world. Yeah, keep up the great work, and hope to speak to you soon, James.
Yeah, will do, Bill. Been an absolute pleasure, and until next time.